This is the Stock Trading Reality Podcast, episode 85.
I was so completely ignorant to the way that everything worked, you couldn't even call it trading.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. He remembers what it was like to not have a cell phone. Clay Trader.
Now, Ches, you are going to absolutely love this fun fact. This is going to just really ignite the old man in you, which we all know, or at least for our longer time listeners. Yeah, our get off my grass, attitude. But yeah, I fully remember the days of no cell phone. I fully remember being in middle school, and believe it or not, even high school, and believe it or not, even my first year of college with no cell phone, having to walk over to one of those phones with a cord and have to call somebody. There was no texting. It was you had to walk over to a computer and see if that person was on, AOL Instant Messenger, and then you had to talk to them. So I guess I'm getting kind of old because depending on your age, you could be listening to this thinking, wait a second, no cell phone. But yeah, I lived through that portion of life and I survived. Ches, you clearly survived too, but remember the days of no cell phone?
I remember, and I vividly want to go back to those days. My parents actually forced me to get a cell phone, and I think I was 13 years old because I would just go out and, leave my little neighborhood, and then they'd have no idea where I'm at. So they literally forced me to have a cell phone, but what they didn't realize is that I don't have to pick it up if I don't want to. So I was that snotty kid. But yes, those days of, checking in on AOL Instant Messenger or something, being like, okay, I'll meet you at this time at this place. And if they didn't show up, you had to go find a phone or, use a payphone or something to call them to find out where they were. But yes, those unconnected days, I can't even, I have a niece that's just turned 12 now, and she's been, she's had nicer iPhones than I have when she was like 6 or 7. So it's kind of crazy, and it's going to be interesting to see how it impacts kind of the youth now.
Yeah, but I guess stopping and think about it, there's a little bit of an age difference between Ches and I, but all through high school, you had a cell phone, whereas me, that just did not exist. So I guess I should be kind of yelling at you for get off my lawn, kid, you ungrateful little, snot.
That's true. That's true.
Yeah, but given that you are an old man at heart, as you've admitted to many times, I knew we could both bond on this little fun fact. But anyways, Let's get into our interview today. We are talking with Dukes, as he goes by in the chat room. He's quite the comedic character. He likes to joke around. For those of you who are in the chat room on a pretty routine basis, I'm sure you've realized that. But he's he does a lot of stuff out there in Los Angeles in terms of acting and singing. And he's got a super interesting story, a lot of good things that we can all learn from. And, Ches and I both just loved how he had no problem, and he still doesn't have a problem putting on the hard hat, and I'll just leave it at that. But let's hop right in and hear about Duke and his journey. Mr. Dukes, welcome to the show.
Thank you. Glad to be here.
It's excellent to have you. In the chat room, you go by just simply Dukes, but I don't know, for some reason, pre-recording, I was just calling you Mr. Dukes, and I don't know why, but I just like the way it rolls off my tongue. So I think I'm going to refer to you as Mr. Dukes the remainder of the podcast. But
all right.
Is that okay with you? You're not going to be offended or anything like that?
Oh, no, that works fine. Actually, my girlfriend's niece calls me Mr. Duke, so you're in great company.
Did you just call me a little girl?
Something like that.
Okay. Or am I reading too much into? That's okay, even if you did. So we're off to a great start here. But anyways, let's just get started. I know you have, based off things you've said in the chat room, kind of piecing things together. I know you have quite it seems like the journey and quite the background. So I'm hoping we can get into some good rabbit holes here. But let's just start at the very beginning. What got you interested in the market? How did you hear about it? And then what kind of drew you in enough to decide that you wanted to actually put some money into it?
Actually, I got into stocks a little bit years and years ago when I worked for a company, Abercrombie, and they gave me stock for being a manager there and stuff. And so I was a little familiar with it, never really done much with it, never really had the scratch because I'm an actor and an artist, and so we live broke as you can possibly live until you hit it. And I haven't quite hit it yet, but I've been able to make a little bit of money and save it. And I decided to, instead of a 1% savings account, to try my luck in the markets. And I'm not too upset with what's been going on.
Now,
So you get stock from this company. Is your plan just to kind of hold it and kind of reinvest it, or are you going to try to sell it and kind of find more opportunities? What what are you looking for as far as a return? What is your goal?
I didn't have any kind of concept back then, man. That was a decade ago, and I was just, it was for me. It was just one of the perks, and it was something that I always knew. You hold on to stock, and then it goes up, and that's all you've ever. When you're a kid, that's all you ever learn. You just get in, you hold it, and it'll go up. And then I left the company and decided that I would rather just have that cash. So I sold out at that point. Didn't really make a lot of coin because I barely had any shares. I wasn't very deeply invested, and then I walked away for a long period of time until I finally had some money.
Now, I just quickly got to ask, this has no relevance to anything other than me just not minding my own business, but you worked for Abercrombie & Fitch, the clothing company. So if I would have walked into one of these stores back in the day, would I have seen you up on the wall with like your shirt off and like underwear? Or is that what you meant when you worked for Abercrombie? Because that's what I'm envisioning right now, that we're talking, that Ches and I are talking with some like male supermodel here that was just had those big posters all over the store of you, with a couple women with your.
At least had a chance to see my avatar, and there's no chance I was ever a male supermodel. No, I moved to LA in 2002, and I was looking for my big break and all that kind of stuff, and it didn't come immediately. And after running up a bunch of debt, I decided I should actually get a job. And I got a job as a manager at Abercrombie because I had a degree and all that stuff. And I guess I was decent looking enough for them to allow me to wear their clothes and walk around their stores. So that's what I did.
Gotcha. Shoot. Ches, I was really hoping that he would.
He was the in-store male model, Clay. So he wasn't on the posters, but he was in there strutting his stuff. So
yeah, that's right.
You had it half right.
Now, I always heard this about Abercrombie & Fitch. Is it true that you had to spend part of your paycheck to buy their clothes?
You didn't have to spend part of here's what they do. They make you be in style for whatever is on the floor at the time. So you don't have to wear Abercrombie, but you might as well, because like I got everything at a 50 or 60% discount. And if I was going to have to wear a goofy looking polo with my collar up and all that garbage, I might as well just buy the cheap one from Abercrombie. So I did. And I was killing it. I was wearing the cargos with the big pockets and the belt and the rope belt. And then I had the two polos with the one with the collar up, then the other one on top of it with the collar up. But you had to make sure they were complementary colors, so you went pink underneath and blue on top. I was crushing it.
If you sound like the Warren Buffett of Abercrombie & Fitch salesman, that's what I got from that statement. Is you were just, like you said, you were crushing it. We're getting way up top. I feel sorry for the listeners. This is the first episode they've listened to, and they're thinking, wait, what is going on right now? All right, let's get back to stock. So you invest into Abercrombie & Fitch kind of by default because you're just getting shares.
Yep.
You end up selling those because you just want to have the money. And then does literally 10 years pass before you ever get interested again? Or
it's not 10 years pass before you get interested. It's literally, like I said, I got into some debt issues and got that job and started getting out of it, and then left that job to take another job as a stand-in on a movie with Tom Hanks. And I did that for a summer and saved up some money and paid off some of that debt. And for me, it was really a fight with debt for a good number of years and got out of it.
Let me ask you this. Did you ever try trading stocks to get yourself out of debt? Or were you always like, you know what, let me just go find a job, find work to get out of this debt?
I'll be honest, it's funny because this was all probably in the time when the pennies were going nuts. And if I had known anything about it and thought that sounded like a great idea, I probably would have done it. But to me, I make jokes in the chat room like I'm completely reckless and I'll just do anything, but I'm not. I was risk averse for a long time. So I didn't want to get involved with it and watch what little scratch I had fall away, man. Because like seriously, I mean, I've had long periods of time where I lived on floors of people's apartments. I was living in a truck. I was living in the cab of my truck right before I appeared on television for the first time playing my music. I mean, like, I've been at the bottoms, and I, through that whole period of time, was never even thinking about it. It's only in the last 6 or 7 months that I've thought, okay, I'm at a place in my life now where where I can do this. I can not only invest, because I have my investments in my retirement now, which is ridiculous that I waited this long, but I can risk money actually trying to actually trade and learn that trade to free time up for myself to get back to doing the things that I really, really enjoy.
Nice. So, yeah, okay. So it sounds like your main motivation for getting back into the markets, correct me if I'm wrong, is not because you want to do this full time for the rest of your life or anything like that, but you want to do it because you see it as a means to just free up your time for some other areas of life where your true passion is. Is that kind of a fair statement?
Yeah, my true passion is entertainment, and it always will be. And I, currently I work on the production side of television, and as fun as it is, I look at it and I see what people can make. God, watching your videos, it was like, oh, I see what he makes in the first 10 minutes of a day. Sometimes I see what you lose in the first 10 minutes of a day.
True.
But I see those things and I go, if I can replace a day's worth of work in 4 hours, not even in 10 minutes, but in 4 or 5 hours, especially being on the West Coast where the market opens at 6:30, I got my whole day to do all the things that I want to do. I mean, shoot, auditions don't start till 11 a.m. I can go to the gym and go to auditions, spend my afternoon doing my studies and my chart work, and then get back to it the next morning. That'd be awesome. So that's kind of where my plan is.
You know what, Ches, what I like about this, and definitely want you to comment on it because since you handle so much with the customer service stuff, but nowhere here has Duke said, yeah, I want to get into the market because I want to drive a Lamborghini and I want to go on a bunch of vacations and I want to have, beautiful women pouring champagne all over me. He wants to get into the market because, well, it allows him to do so many other things freed up. It frees up his time, and he's got the advantage with the West Coast, but I mean, his true passion is not the market. And the point here that I'm getting at is you don't have to get in the markets thinking, you know what, I got to do this for my full-time job. I got to do it for the rest of my life. Now, yeah, a lot of people want to do that, but you gotta. That's not how the market works. It is a great tool to just free up that time. And this is where I want you to more so comment. I get the impression, and I know I deal with it, that a lot of people think that you have to go all into the stock market, do it like 24 hours a day, and the only reason you're doing it is to drive that Lamborghini. But that's not how it has to be, right?
No, it definitely doesn't have to be that way. And my motivations were actually pretty much exactly similar to Duke's in the sense of he just wants control of his time and to be able to live his life and do things that he enjoys. By no means does he have a bad work ethic or doesn't want to work. He's totally willing to work, and he's proven that by the highs and lows of his life. But at the same time, if he can get more done in less amount of time, that frees up, like you said, pretty much the entire rest of the day to pretty much pursue things that you're really passionate about. Because just like you said, there's so many people out there that I deal with who think, yeah, I'm going to start trading Forex. I'm going to trade around the clock, 24-hour market, and I'm just going to sit here and be glued to my computer. And, I kind of scratch my head. And so you're just going to let kind of the world pass you by for a while and, just stare at your screens. Sure, you can make some money doing that, but at the same time, is that really what living your life is about? So yeah, for him, it's totally about opening up his opportunities and pursuing what he really wants to do in life.
Yeah. So back into your journey. You go to battle with that debt. You pick up jobs here and there and there. And did you get all the debt paid off before you finally wanted to get in the markets? Or, where was kind of your number situation at in regards to that?
Well, yeah, I mean, I paid off a few tens of thousands of dollars in debt, got rid of all that, and was floating just zero balance for a while. Then I took care of some things that I had to take care of. I bought a truck, that my old one basically completely stopped working. And I got, I took it to my mechanic who I've had for 10 years. And I gave it to him. I said, hey, man, just give me a call. Let me know how much it's going to be. And then I went into my office and I decided that if he called back and the number was higher than 1,000 or lower than 1,000, I would fix it. And higher than 1,000, I'd buy a new truck. So he called me and it was going to be $1,200 just to take the engine apart and do what he thinks might be the right answer. And if he was wrong, he'd have to keep going. So I said, well, you just hold on to that truck. And I went that afternoon to Ford and I bought another truck. It's like, forget it. So I paid that thing off for a few years. And now that that's done and I've made a few advancements in my producing side career, I was like, man, now I can get in, So that's kind of, I waited until my life was almost fully stable. I have a very small credit card balance on a card that has a very large limit. So I'm not that worried about it. And
let me just cut you off here because I mean, beautiful segue. Your life was stable. So when you were paying off this truck that you bought, you were not paying it off by trading, right?
No.
Okay, so you had jobs, you were having money come in, and none of this was from trading, right?
No, I still have a job. Come on, man. I make a pretty decent little wage, and that allows me to not get upset when my option tanks.
Perfect. And none of this was even planned.
I know, this is so good.
Yeah. So the whole point here is that, Dukes did not trade to create a stable financial life for himself. If your goal is, you know what, my finances are kind of out of whack right now, and if I love that word, stable, well played. I just want to get my finances to be at a stable point. Trading is not the answer for you. And yes, we sell courses, and that's probably the dumbest thing that we could say here, because a lot of other people tell you trading's a great way to get your finances to stable. Wrong. That's a great way to make the hole that much bigger, because if you are putting yourself under that kind of psychological trouble of, well, I got to make money here on this trade because I got a truck payment coming and I want to get back to, financial stability, it's just not going to work. You are going to wreak havoc on your life, and it's not going to work. And I suppose you could think, and I guess I am just some random guy in a podcast. If you don't believe me, that's fine. You go try to trade your way to a stable financial state, and let us know how that goes, because you are going to be a stressed out mess, and it's not going to turn well. So, well done, Dukes. You put on the hard hat, and you went to work, and you got yourself financially stable by working a job. Nothing wrong with a job, right, Ches?
Boo! I want to trade on the beach and make the same amount of money every day for 1 hour of the day. No, yeah. So he literally, like you said, worked hard and just pretty much did not even assume he was going to make any money trading. I want the listeners to really kind of understand that aspect. And by no means is Clay saying you can't make stable money trading. You totally can. But you need experience. You need time. Like it's not something that's going to come overnight, and it's going to take hundreds and hundreds of hours. And even then, you're still at the mercy of the market. Clay's had many days, and we all have had days where literally show up in the morning and there's no opportunities. There are days that go by where you're literally like, there was nothing for me to do. There's no money for me to make, and you're not willing to kind of speculate on something that has a low probability of profit. So yeah, it's the furthest thing from somebody who wants to have, stable income right away or to get out of debt. Those are like the two big pitfalls a lot of people have.
Yeah, and just to summarize that up, if your plan of action is, I'm unemployed right now, so my new job is a day trader, or I think I just want to quit this job because I don't like it so I can become a day trader, don't do that. There's nothing wrong with trading on the side, as it sounds like we're going to go down the path with Dukes, because having that part-time job, and if you trade alongside that, it can create some good opportunities for yourself. So Dukes, well done. In all seriousness, congrats, good job, way to just put on that hard hat, battle back, get those debts paid off, get that truck paid off, and in your words, bring yourself to a stable financial condition. So you now reach the stable condition. At that point, what actually kind of brought you back to the market in terms of, hey, I want to get involved again? Or is this always kind of a longer-term goal, or did you kind of just stumble upon it and say, oh, yeah, hey, that stock market thing?
Well, it kind of worked like this. I had a little money that I'd been saving for a while, and I decided that it was time to start getting involved in long-term savings, right, to put something in retirement and do that whole nine. And when I decided I was going to do that, I also decided, because there's limits to what you can put in any of these, IRAs or 401k or anything like that. There's limits to what you can put in. So I said, well, I know I'm going to have more than that I can put in. And I live in Los Angeles, and I want to be, I live with my girlfriend, and we have dogs, and I want a house. I'm tired of living in an apartment. And I know that that's not going to come through my overtime, any of that kind of stuff, because good Lord, they don't even give me that anymore. Yay, salary. But I said, well, maybe I can start trading and start saving and earning some more money in the market, and that way I can build that up. So I opened two different accounts. One was my retirement savings account, and one is my trading account. And then I decided, immediately get in and just buy some stocks, just buy some things that I like, so got some Google and some Amazon and some, Facebook and Ford and whatever else, things that I knew that I would like in my retirement account, and then did sort of the same over on the trading account side. And after a month or so of watching the stocks in my trading account just crawl except for Amazon. I happened to get in right before it got like a 10 or 15% bump after one earnings, and I didn't even know what that meant. I was just like, yay, stock went up. All right, that's fantastic. But after a while of sitting there and watching it, I was like, I should actually start to learn what this stuff is so that I can maximize what I'm doing over here.
I really like the fact that that you didn't just stop and say, okay, well, this is how it is, and let it roll. You kind of recognized right away that there's a lot more I can learn. I could probably have a lot better return on my capital, even though things are still going well. And a lot of people get into the market, and especially if you're a new listener to this podcast. Household names, like you said, Ford, Google, Facebook, Tesla, things like that. This is completely common, and a lot of people do this. The difference is that from what it sounds like, you're not under the impression of just kind of buy and hold strictly, maybe for your retirement, sure. But your trading account is just kind of a different place that you want to get a better return on than a savings account, which is totally awesome. Now, I guess at this time, what broker are you using? Did you buy into the E-Trade baby? Where are you at this time?
Damn it, Chez.
Yeah, I caught him. right away.
Don't even tell me
E-Trade.
the E-Trade baby got you,
No.
or the guy in the helicopter for Scott Trade.
I'm not in E-Trade. I am in Scott Trade.
Oh, good. So the guy
I
on the
did
side
say.
of the helicopter. Oh, he got you. Great. Goodness.
You know how much that commercial probably cost to shoot, too? Jeez.
It's all right. Duke's paid
just
it.
a bunch of Duke's commissions, yeah.
Yeah, Duke's commission paid for it, no problem. So you are using Scott Trade.
Yep.
And I'm curious, you said, because I liked Facebook and I liked Amazon and can you define like? What do you mean by like? Just because you knew of them, or were you looking at like financial statements? Dig a little deeper into the term like.
Okay, so the production company we work with, or that I work for, we have a web development division, and I'm good friends with all the developers over there, and they had recently been to an AWS conference and understood what was happening with Amazon Web Services. And we started talking about it from a monetary perspective instead of from just oh man, I like this huge name in the buying and selling stuff space. And so I said, well, I think that's probably going to be a good one to go for. And that happened to be the best immediate return just because of, like I said, an earnings hit right after. But Google, for me, the umbrella that Google is, all the things that they're going to do. I mean, let's be honest. They are the umbrella corporation from Resident Evil. They're going to take over the entire world and destroy us all with crazy zombie vampires. That's who they are. But if I can make some money while they do that, I don't have any problem with that. I'm good for it. Facebook, just my familiarity with them and with Zuckerberg and the things that kind of the direction he wants to go. These are the things that excite me. And I thought they would be good buys. And then Ford, I'm a Ford truck guy. Like the truck that I went and bought was a big Ford F-150. I love Ford. So I got in with them and subsequently got out about a month ago or a couple weeks ago because I realized that I want more growth than the dividend is going to provide. And that's pretty much the reason to be in one of those legacy stocks. And so I got out of that. But I used that money to buy some options that are in the positive by a good bit right now. So I'm pretty excited about that.
Okay, so just because you said you opened up 2 accounts, so were all these stocks that you quote unquote liked, were these in your retirement account or were these your trading account?
Both.
Okay,
A little both.
So your plan was, all right, I'll hang on to some Google shares for the next however long, but these Google shares, if I can turn them in a week or two, then I'm going to do that. So you're just dividing that up. Is that essentially how it broke down?
Yeah, absolutely.
Okay, so how is the trading actually going for you at this point? Because correct me if I'm wrong, but you have not come across, the community yet or anything like that. Is that right?
I haven't come across what yet?
Our community, claytrader.com. Have you stumbled across that
Oh,
yet
no,
at this
not
point?
at that point. Not when I first bought in, I hadn't.
Okay, so how is the trading, not the investing, because obviously that's, investing, you don't really care about that for the next however many years, but how is the trading actually going, at that point in time in your journey? Was it just kind of up and down or, and how are you feeling about it? Confidence?
Well, man, I'll be honest with you. I was so completely ignorant to the way that everything worked that it wasn't. You couldn't even call it trading unless you just call it ridiculously long, slow swing trading. Like I bought a bunch of stock and I sat there and I was watching it, and I got him. I started reading Motley Fool and had some ideas and just started thinking maybe this. They all seem to like this stock, and a buddy of mine likes this stock, so I'll get into it. And then it went down, and then another one went down, and I got kind of down on it and didn't like it. And that's when I started pursuing something else and ran across your vids and a bunch of other people's on YouTube. But I think I just dug the way that you were kind of, self-deprecating at times and completely willing to show that you weren't unbeatable and all that kind of stuff. And I was like, well, here's a guy that he's either building his brand on being completely affable and he's roping people in on a rope-a-dope, or he actually is just cool and down to earth and is hip to teach people a thing or two. And I'm a dude who could learn a thing or two. So that's when I started looking into y'all.
All right, Clay, make sure in your next video that Nate edits so you don't show the Ferrari that's sitting in your driveway right now.
Yeah. I just called the Apache guy, and he's going to fly that thing out to my my other home. So that way,
we don't want to have that picked up on the mic. So make sure you schedule them later after the podcast.
Yeah.
But yeah, the thing I like though is that, Dukes, you ran into kind of that breaking point, like you said, where you just kind of were getting down on yourself. And you're like, this is not the way it should be. I got to figure out something else. So honestly, it's so much better that you found that breaking point much earlier in your kind of trading than some people who literally will blow up an entire retirement account and then go, I should probably learn from somebody or learn somewhere, just learn anything, Ignorance is totally bliss, and you hop. You think you just hop in the market, and it's all fun and games. But there's a lot of risk involved. There's a lot of speculation involved. There's a lot of thinking that goes into it. So kudos to you, first off, for kind of finding that breaking point before you kind of went down a really, really dark rabbit hole. So you realize you need to do some research. You realize you need to learn more things that you don't know. You stumble across Clay's videos and a ton of other people's videos. What's your kind of thought process here? Are you just going to try to follow, hot stock pick alerts, or like just read up on, tickers, like you said, in Motley Fool or any other news kind of publication? What are your thoughts for what the future of your trading holds at that time?
I really didn't know. I just I wanted to learn what the mechanism was and what the process was, because when you watch these things, and you see, Clay or any number of these other guys that put their vids up, the idea that they know what's coming before it happens, or they have a reasonable guess at what's coming before it happens. And if it does, they win big. And if it doesn't, they don't lose as big, and it's that sort of thing that, to me, I was just floating along fairly blind without any idea of what was going to pop or what could. And, I don't want to get mired down in reading a bunch of financial statements and trying to figure out what the leadership of the company is. And, okay, so they hired this new CFO, and does that mean they're going to start taking on a ton of debt, and so therefore they might not be the best? I don't want to learn about all that. I really don't. I have enough things in my life that I have to spend time on, that I don't want to have to do all that. But I can spend hours and hours watching these videos and having Clay talk to me and occasionally put me to bed, that I can start to learn how it all works. And so that was kind of my main focus. I still have, newsletters that come, and I'll look at them and see if there's anything that interests me. But I now take what I've been learning through Clay Trader, and I start to apply it. I've done a pretty good job on this one little stock that tanked today. Well, it didn't tank. It did a pretty nice little drawback that I think was just knocking out stop losses, what it looks like to me. But and a lot of that was based on just starting to understand what movements look like and how patterns set up. And I've made, I don't know, a good little 200% return on it on some of my shares, and a little bit less than that on the others. So I guess I'm a guy that likes to build on multiple disciplines, put them all together. I think Dim, I listened to his podcast, and one of his huge trades came from that exact thing, kind of a fundamental basis, and then applying technicals on top of it that really paid off for him. And I was like, well, that sounds like a good idea. So I'm kind of doing a little bit of that.
So you're kind of bringing in that fourth dimension, that fourth moving average, as we call it, just looking at some broad fundamental things. Like you said, you're not going to dig into the management history and be like, well, this guy's got a past history of doing that at the last company, so the balance sheet may expand, because you're not doing that, but more so just a broad kind of general idea. Is that essentially kind of how you're using the fundamentals?
Yeah, exactly. If I see, a company that
give us an example. Actually, the best way to do this is give us an actual example and walk us through.
Okay, well, so the one that I was just talking about is Exel, EXEL, Exelixis. They're a pharmaceutical company who makes a cancer medication. And when they first crossed my desk, they had passed their I guess level 2 trials. And I was like, well, that's interesting. That's something I should look at. And because honestly, it's one of the big things that we fight worldwide, right? This disease. And if they can come up with a better medication for it, they are going to make money. It's not like a fad product that's going to be something that it'll come and it'll go. And it's probably not something that'll run into any kind of legislative issues like some of the cannabis pharmaceuticals will. So I said, let me take a look at it, and I did, and I saw that the stock had a nice bump recently before that, and had been trending upwards for a short period of time, months being a short period of time since it's been around since '02, and I looked at it and I saw where it's been in the past, and I saw that this drug or this company seems to do cycles when they're in R&D and then when they're in the cell phase of a drug. So I said, well, let me get in. And I did, and ever since then until today, this morning was a panic morning for some people, but ever since then until today, it's been doing really, really, really well, climbing high. I got in a little over $5, and it was a little over 15 this morning when it dropped down about 20% before bouncing back a little bit, and it's still down 15. But
yeah, right now it's at $13.21. But so just so people kind of understand, you established the idea on the premise of which is fully logical. They're working on cancer. If indeed they do solve something, then there's no ifs, ands, or buts about it. They're going to make money. So that's your fundamental stuff, right?
Right. That was it's who they are, and then looking over their life cycle and seeing what they've done in the past, and then looking at the actual a couple of the reports on the actual drug itself. It wasn't just, oh man, they're fighting cancer. That's great. There's a million companies that are. But it was actually, what are they doing? How are they doing it? Who else is in the space? And how competitive are they in the space? And all of those things checked good for me.
Okay. So then where do charts then come into play in this whole process? Because you mentioned the word trending and stuff like that. So I know they're there. I just want you to specify a little bit more for the learners where that kind of line is crossed from fundamental to now technical analysis type stuff.
Right. Well, it kind of lines up as a tramp trader if you look at it over a long period of time. I mean, it was high on a previous drug cycle, and then it started going down and going down and going down, and the short interest went higher and higher and higher. By the time I was able to get involved in it, or even had heard about it, it had started to turn the corner, and it was building positive interest again. And I just started looking at different levels of where I thought, where some of the shorts may have been, and if those things get short stop losses start getting knocked out, where we might see some jumps, and it happened, which is really cool. And it happened to be had a big earnings beat that helped, but that's that's completely outside the realm of technicals. You never know what's going to happen on those days, but I liked what I saw just from the limited knowledge. And I stress, I have a very limited knowledge of technical analysis and the full process. And I can always go back through the classes and learn more. And every time I do go through them, I have aha moments. But from what I had seen, I really liked where it was headed.
So I like the fact that you kind of had taken a look at its previous cycles. A lot of names cycle, it's pretty much the gyration up and down of stocks. And you kind of looked at that compared to their previous kind of stuff. So what you're doing is you're looking at past history. So that's totally a use of technical analysis right there. Another thing that I love as well, looking at this chart, and for our listeners out there, take a look at EXEL on the daily chart from pretty much May until the end of September. You pretty much took no heat on that. That's just been a steady rising, not always very huge gains or anything like that, but to go from $5 to $16 almost, that's a pretty awesome trade. So kudos to you for kind of doing that little bit of research on the side to kind of help you find that name. Now, when you entered this stock, did you have a particular kind of uncle point where you were going to say, well, if it goes down to, $4, I'm going to cut my loss, or $3, or did you just kind of get in and not have that kind of as part of your plan at that time?
At that particular moment, I didn't really have that. I didn't have a hard, man, if it goes down to 4, because my initial in was only 100 shares. So I was looking at it as, I'm in for $536. if it cut in half, it wasn't going to kill me. So I was like, well, I'm going to ride it and see what happens. And it just so happened that I did get in at a good moment, and it just started going up and up and up. So even when it slowed down and drifted sideways, I never had a panic moment of, oh man, is it done? Should I get out? Because it didn't, by then what I had learned about technicals didn't support diving out of it. I just kept telling myself, okay, it's consolidating right now and let's see what happens. And then it would go up again, and then it would drift sideways, and it would go up again. So I was like, well, it's kind of doing what they tell me that it should do if it's following the quote unquote rules, which don't exist. But if it's following the general pattern, it's doing what it's supposed to do. So I've been in since about where you're looking at. I mean, 536 was back in May, I believe. And that's how long I've been in.
And what I like about all that is the reason, now I don't know if I should refrain. I'm not sure the reason you only went in with 100 shares was because you're sitting there saying, well, I know that a big part of trading is risk management and risk control, and a very easy way to manage risk is by position size. So therefore, I'm only going to go in with 100 shares. Maybe you didn't exactly approach it like that, but it sounds like in your mind, somewhere in the crevice, you understood a very basic concept of risk management, because yeah, with just 100 shares, you didn't need to be sitting there freaking out, stressing out, because whether or not you, like I said, you acknowledged it and knew what you were doing, but you were managing risk via the simple trick of position size.
Exactly. I mean, that's it. I didn't sit down and take a book learning sort of thought process towards that, but it's exactly what it was. It's, if I'm going to get involved in something that to me is new, the whole idea of investing in something that's small and investing in something that I'm unsure of, because again, it had only passed phase 2. It hadn't passed phase 3, and phase 3 was going to be critical. A lot of drugs get to phase 3, don't make it, and bottom out. So I was willing to go in for 100, and I didn't increase my position size until I had gotten, I think it was about a 40% return in my head. But it was basically, I set another level and I said, well, if it crosses this level and closes above one day, I'll buy it the next day. That's my thought process. And I did that. So
now did that thought process come from the charts themselves and what you had been learning?
Yes, that came from the classes and starting to understand where these points of resistance and all that might exist. And so I plotted some on the line or on the chart, and said, well, yeah, if it gets to this point, I'm definitely gonna increase my position size. And when it did, I went in for another 150 and sold 50 of those for profit a while back, so I could pick up something else.
So you're happy with those decisions and to kind of buy some more as it broke resistances. I mean, I'm looking at the chart here too, and that you're not lying. I mean, this 2016 from May to September, or really to October. Look at that chart. If you want to pull it up, you'll see exactly what we're talking about. So where do you actually stand right now? We've established, you've invested into Clay Trader University. You go through the classes. You're still learning. All that's great stuff. So obviously you like these pharma plays, and you like to use that fourth dimension of, some fundamental analysis and then combine that with technical analysis. But I mean, what are you focused on right now? Stocks, options? I mean, where's your kind of present day, focus really at?
Well, on the trading side, I'm definitely option trader now. Number one, because I just use an all cash account, and so in doing so, it helps me avoid pattern day trader, and it also resolves the money the next day. And just for me, there's things there that I like, and I like the fact that I can get involved on 100 shares at a time, basically for a much lower end. It's a stock replacement to a degree, where I can get a lot more bang for my buck, and there's a lot more risk involved, and I know that, and I've seen the bad end of that a number of times and had to have stop losses drilled into my head, and have done a good job lately of mitigating those risks and sometimes having very small wins, sometimes having much larger wins, and some usually having much smaller losses than the bigger losses. So but yeah, it's definitely I'm an option side on that. And now I'm actually, in my retirement, I do some as well with some of the stocks that I am involved with, like Facebook and Excel. Actually, both of them I have options on just because long-term options, just because I can be more involved with the stock in that way from where I see it going than I could if I was just trying to invest in shares.
Yeah, and it's obviously like you said, you really summed it up perfectly in the sense of it's just like you said, more bang for your buck, but it does come with a good amount more risk. That's not to scare people off, but I'm going to kind of steer this a little bit towards kind of touching on that risk portion. A lot of people we talk with, just trading in general. People struggle with kind of dealing with losses. So I want to kind of talk about that. You said you had a couple, really spectacular options trades and then other ones that have just kind of blown up in your face and really kind of you've been hammering on using stop losses and kind of, understanding that managing your risk is what you can really control. So let's talk about those losses. Did you ever just kind of find yourself right at the beginning just hanging on to things that weren't working out, or, how did that work for you? Or were you just always disciplined from the get-go?
Well, no, I wasn't disciplined from the get-go at all. I consider myself in my life a fairly disciplined person, but not with this. And a lot of it's because when I first started getting involved with options, I didn't really understand every piece of it. I saw you guys in the chat room talking about the different Greeks and all that kind of stuff. And, we said before, I don't want to study all the fundamentals of a company. Well, I didn't want to get all that deep into how the Greeks worked either. I was just like, this option costs way less than the share of the stock, and we'll just go after it and it'll go up because that's what happens when I buy stuff. And that wasn't true, because the price might, go up a couple pennies, but it goes up a couple pennies over an hour. And then the price of the option goes down and you're sitting there going, I don't understand this, but hey, no big deal. This option doesn't expire for 2 weeks and it'll go up by then. So I'm totally cool. And then it gaps down by $1.50 overnight. And you go, well, that was $300. All right, no big deal. And you go, it's okay. It's going to bounce back because I've got 2 weeks. And then, nope. So, there's lessons like that you learn, and you start to, even though you don't want to, you start to put the stop losses in and understand that sometimes you were just wrong. Sometimes you just were wrong, and you got to deal with it.
That's a quote right there.
Yeah, there we go. Now, does that make you a bad trader when you're wrong?
No. What makes me a bad trader is my inability to figure this thing out. That's pretty much what makes me a bad trader. But no, I'm kidding. No, actually, it doesn't. Being wrong happens every single day to pretty much every one of us to a degree. Even if it's so much of, yeah, I was wrong because my target was it was going to grow to $25 and it grew to 22.5. Well, you were wrong. But you were wrong gloriously because it still did what you thought it was going to do. It's you start to come to understand that it's completely okay to be wrong as long as you've provided yourself an out. It's when you haven't provided yourself an out and you're wrong to the tune of losing $2,000 in a day, which I haven't done, so don't freak out. But it's when you're wrong to that you're starting to hurt yourself, and it can get into your life in other areas that your lack of success in that point can hurt you.
Yeah, I love that. There's nothing wrong with being wrong if you've provided yourself a way out. In the world of trading, we would call that a stop loss. But yeah, if you're wrong and there is no way out, aka a stop loss, then yeah, that's where it does make you a bad trader, because you're just essentially running around crossing your fingers and just wishing for hope the whole time. So yeah, definitely well said there. What does your actual chart look like? I like to ask people, this one, are you like looking at a million indicators? But when you look at your personal chart, what sort of things are on it? What would I see if I was sitting next to you?
Okay, well, you'd see. So my main window, of course, is just I use 2 different tabs. One tab is my 1 minute chart, and the other tab is 4 charts at 60 minute, 15, 5, and 2. And then on the actual chart itself, I have trend lines that I've drawn myself, as well as supports and resistances. I use the 200, both the EMA and the SMA with the 200. I don't know why. I think it's just because I haven't figured out which one I like the most. And I use the 10, the 50, and the 20 with the 20 is the base for my Bollinger Bands. Then I have the MACD, the stochastics, the money flow index, and volume all on my chart.
Now, how much of those indicators weigh into your decision to kind of take a trade? Because that sounds like there's actually a good amount of indicators on there. I have a feeling you have a lot of it on your charts, but you don't actually utilize it for some of your trading. Is that accurate?
Well, I mean, you don't use every piece of it, right? It's funny because I sit here and earlier today during that big fall of my Wonder Drug, I kept watching all the different support levels just fall and fall and fall, and I'd look and I'd go, okay, on which chart is this MA actually going to matter? On the 5, is it going to hold? On the 15, is it going to hold? Nope. How about on the 60? Nope. So I think that while I use them, I do understand that they are just, they're all fluid from time to time. And I think that when I look at what I have, the lowers, which are my MACD, my stochastic, my money flow, I think for me, a lot of times the money flow speaks to me a little bit. What has been happening with the stock, has the price been drifting down and yet money's coming into the stock at a high degree? That seems to make me think that maybe there's something good coming, and I look at the pattern to see if it's shaping up. Volume is definitely a huge one for me. It's kind of why I walked away from Tesla, because the volume was so spotty for me. And so I think that, we preach it, right? Price action and volume, price action and volume. And those two things, whether or not there's money coming there, whether or not there's a lot of trading happening, those tell me a lot.
So you got a good kind of go-to system here that when you're looking at a chart. So on that note, what about more of an overall system in terms of your routines? I mean, you do work, you have, I guess, a job now. I mean, you're not doing odds and ends things, but
right.
What does your normal day look like from a trading perspective? I mean, are you doing stuff the night before? Do you wake up early? I know you are out in the West Coast, but just walk us through a normal routine, because a lot of listeners, do have jobs, so they like the question on, how you approach each day.
Absolutely. My day actually starts the night before, I guess, somewhere around 9 p.m. on the West Coast. I'm usually in the chat room and looking at my watch list to compare the daily action, the hourly action from recent days and such, to see if I need to make any big adjustments, to see if any new firm supports and resistances have been developed on my watch list stocks. And also because late night, some of the guys that are in that chat room, we like to talk about what we're seeing, and scans are happening, and it's a good way to share the knowledge base. I can't look at everything. I don't want to look at everything. I want to see. I'll chirp in with information that I have on my watch list. Other people will chirp in with information on theirs or from their scans, and we'll sort of have a little teamwork going there. And then I do that for generally an hour or two. Go to sleep. Get up 5 o'clock in the morning. Get some coffee. Sit down with one of my dogs. Pet my dog, and go through scans for the morning and see what I think might be happening. Then at the bell, 6:30, it's like I wait for 10 minutes after the bell before I initiate a trade.
Yeah, I like that a lot, because there's a lot of emotion that goes into the morning kind of trading, especially. So at what time do you kind of start heading off to work? Do you start at 9 or something like that?
I'm in the office between 9:30 and 10. I generally try to restrict myself to stopping. Don't enter a new trade after 7:30 in the morning here. If 7:29 there's a good setup, I might go ahead and enter it, set a stop loss, close the computer, walk the dogs, take a shower, and get out of here and go to the office, where I promptly plug my computer into 2 screens and watch it the entire time I'm there.
Yep, that's something I used to do in my other job as well. So what I'd like the listeners really take up on is that Dukes has his routines. He does a lot of it in the morning. He's got his set hour that in the morning that he'll find his day trades. He's got a time limit when he has to stop, so he's not in positions that he has to worry about kind of during the day. And then he kind of moves on from there. But Dukes, has been absolutely awesome talking to you today. Thank you for sharing your story. But I do know the real reason you are here is that you wanted to borrow my time machine. So if I was to lend that to you, and you could go back to kind of the start of your trading journey, what's one piece of advice you would give yourself?
What's one piece of advice? I would say spend a little more time getting educated before you start burning through your money. I've done a pretty good job of I walked away from paper trading pretty quick, just because I tend to really only pay attention when there's money on the line. It's kind of like at the craps table, the practice craps table. You take chances you'd never take, and you pay off big, and you think you're great at it because you can do things that you would never do in real life. And you get to a real craps table, and you find out real fast you don't know what you're doing. That money goes away quick. So I think I would probably tell myself maybe spend a little more time in the paper trading, maybe start to understand how that works better before you wash some money away. I didn't blow anything up for sure, but looking at it right now, the biggest frustration I have is that there's not more capital there right now to do greater positions. Now that I understand what I'm doing, I could be doing better.
Yeah, but also, I mean, you got to be careful with that because that's a common pitfall. Yeah, I know what I'm doing, so now it's time to scale up position size, and then all of a sudden,
oh,
bang.
Absolutely.
So, I mean, I get what you're saying, but at the same token, it's not necessarily a bad thing. Your account size is forcing you to go slow, and going slow is definitely the preferable way to go. So,
yeah,
I mean,
but let's be real. If I had your time machine, Chaz, I'd probably go back to 1920 and buy Coca-Cola. That's probably the plan, I think.
I mean, yeah, if you could go. Really, I mean, not even that. You could just go back to any date. But that's the cheater's answer. We can't allow you to just straight up say, I'd go back
That's
and buy
a good use
stock.
of the time machine, though.
It is definitely a very good use of time. I mean, really, then you don't even have to learn how to trade. You just have to know how to buy Coca-Cola in 1920. But that's rigging the system a little bit too much for the purpose of the question. But well played. You're quite the showman. I can see that. So, well, now I'm very curious about this one, just because you work in this industry anyways. Okay. So I guess you could use a movie that maybe you've been in, but I don't know. I feel like that might be cheating. But what is your favorite movie?
Oh man, that's really difficult. And I know that you'll like this, but I would say all time probably Braveheart. I absolutely love that movie. It was a big part of my life when I was in school, and I just kind of attached myself to it just from every bit of the filmmaking involved. And the story that it told, and the fact that I love the Scottish accent for some reason. I don't know why. But from time to time, I'll get into it myself, and I'll start to... I actually have a character, his name's Seamus, and he is a bit of a head, I guess, but he's a friendly guy.
And there's the... So, Nate, we got to bleep that one out. So we got a Scottish potty mouth over here.
Yeah,
so.
Well, no, that's the point. You
that's his role.
It's true. I do my Scottish. I want to do my Scottish accent right now, but Mr. Dukes would totally put me to shame. So it says you're up to bat, sir.
Yeah, he definitely would. So, Dukes, what would you say is your favorite meal and dessert?
Oh God, favorite meal and dessert. Well, as far as dessert goes, I absolutely love cake. So like any cake at all that's like a big, just regular yellow cake with amazing icing on it, or a double chocolate fudge cake, anything like that is killer. As far as meal, I guess you could make it real simple and just go a nice big thick cut of steak and a baked potato with bacon and sour cream on it. That's probably right there in my wheelhouse. That or barbecue ribs. Those two things are fantastic.
Either of those, #America right there. I mean, that's as good as it gets right there. Simple and to the point, but pure America. What about traveling? If you could visit one place, or if there's one place you'd like to visit someday, what's kind of on your bucket list?
Yeah, I've only done a little bit of traveling, so that's a tough one. I'd like to get back over to Europe because I only went to London, and I'd like to go see Scotland. I'd like to go see Italy. I'd like to kind of do that whole continent and figure out what all's going on over there.
Very nice. Yeah, I'm yet to get there myself. So yeah, definitely a lot of cool stuff that way. Now, what 3 words do you believe should be associated with successful trading?
Well, discipline, persistence, and education, I would say, probably be the 3 solid ones. You have to educate yourself in the market and how things work, and in how to recognize patterns and how to recognize good ins and outs. You have to be disciplined to follow those patterns and to put a stop loss in, as ridiculous as it sounds to hear me say that, because I was always completely against that concept. At least I was when I first started. And you have to be persistent. You have to not get down by any small losses and continue to drill at it and and continue to work at developing your skills and sharpening yourself so that you can have success.
Well said. I don't think it really gets any better than that because, yeah, absolutely. Especially that you can't get down on yourself. We already talked about it once, and you gave a great answer. Taking a losing trade does not make you a bad trader, does not make you, suck at trading or anything like that. As long as you're doing it the right way, then, that is just part of the game. Well, Mr. Dukes, our time here has come to an end. So I really do appreciate you taking time out of your day to hang out with us.
Oh, it's been great hanging out with y'all, man. Great talking, and sorry if my voice is raspy. I lost it this past weekend, but I really enjoyed it, and I enjoyed being a part of the community, and it's been a lot of fun, and I look forward to a lot more stories and more time with y'all. I wish I could make it out to Nashville. I can't make it there for that one, and I know you guys are going to have a blast. I love that town.
So you've been there before, and is it a good spot? Did we pick a good spot then?
Yeah, Nashville's fantastic. I did an album there. We've toured through there a couple times. Like, it's a heck of a lot of fun. And I even say I don't know what all your plans are, but I would even try to look for spots off Broadway. Broadway's where all the tourists go, and it can be a lot of fun. But you'll find better music, and I say better times a little bit off Broadway.
Nice. Yeah, we have a couple members from Nashville that are going to give us kind of the behind the scenes look. So yeah, it should be pretty good. So, but you have your own mic, so I definitely imagine you coming back at some point for another. Would you come back? I guess I'm assuming right now, but would you come back for another episode at some point?
I don't want to talk to you guys anymore.
Yeah, you're not the first person to say that, so that's fine. I'm gonna go
hang out with the stock twits and figure out,
what stock we're all shorting. Yeah,
exactly. Yeah. No, yeah, absolutely, man. It's been fun, and love to, and maybe at some point I'll have some awesome baller trade we can talk about.
Hey, you got plenty of baller trades already. If EXEL is not a baller trade, then I think your expectations may be a little out of touch with reality. But thank you again, and I just want to say it one more time, Mr. Dukes, I appreciate it.
Have a great day.
For you listeners out there, a few final things before we all part ways. If you're listening on YouTube, check out the channel as a whole. There's a lot more than just these podcasts, chart analysis videos, live trades, and many other things. So check out those, and hopefully you decide to subscribe to the channel. If you're listening on the website itself, please click the share button, leave us a comment. We do read those. And then finally, for those of you listening on iTunes or any of the other podcast players, leave us a rating, leave us that feedback. Those ratings really do help us, just get noticed more. And, little things like that really do go a long way. So if you could do that, it would greatly be appreciated. Thank you again to all you listeners. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.